So wonderful. Good afternoon, my ladies and gentlemen, and welcome back to our webinar for tonight. It's Thursday, August number 15, and I'm really glad to welcome you here on Sabio platform and on SabioTrade YouTube channel. It's me, Markus from Know-How Trading, and in behalf of SabioTrade, I'm really glad to share my knowledge and my experience with you with a special education topic for tonight, why you should trade major currencies. And of course, uh, how to trade them and how we can make money with trading. And beside a little bit information, where do you find some information on the trading platform from SabioTrade? I'm glad if you leave a comment in the chat box here on YouTube or maybe afterwards, because this is a live YouTube stream here right now, and you will find afterwards a recording on the Sabio platform, a YouTube channel, and you can leave a comment. If you have any questions afterwards, I will see it, of course, and I can answer all your questions. And very soon, maybe we can do live trading together. So we are trading on very good news and very good developments in the future. Okay, I'm glad if you leave any comments in the chat box. So feel free to ask whatever you want, because we can we can talk about almost everything. Okay, great. So our topic for today is why we should trade major currencies. What are the major currencies and how to trade them, how we can make money with that. And I'm glad to show you how we do this and how I do this with my students. Okay, let's start. And again, just an information, this is an education webinar. You should really have attention for it, because once you start with trading, you should know what you do there in trading. And it's very important that we dive really deep into knowledge and wisdom, because it's always about the 5 magic questions on the right edge of the chart: what to do, how, when, where, and why. And as long as you cannot answer those 5 questions with logical answers, you're forced to trade in an emotional way. And you know, trading in an emotional way is a really bad thing, because trading is a mathematical zero-sum game. Okay, let's start. So what's the topics for tonight? Understanding the major currency pairs in Forex trading, how to read them, what's about the liquidity in the currency pairs, and then we want a little bit talk about the benefits and the cons of trading major currency pairs, and if it's a good place to start. So when you are a beginner in trading, or if you're working on the assessment here on SabioTrade and how to manage and how to complete the assessment, then is trading in Forex or in currency pairs really a good place to start. Okay, let's talk about what is our Forex currency or major currencies in Forex. So the most popular traded currency pairs are well known as the majors. And before we look at those FX currency pairs, in the first place, we need to look what a currency pair actually is. A Forex currency pairs, or all financial traders, commonly seek a profit by speculating on changing the value. And you know, in trading, the strategy in trading basically is given by buy cheap and sell expensive. So it doesn't matter if a value of a company or the worth of commodity is rising up, you only can make money when you are speculating on buy cheap and sell expensive. Okay, in trading, we can trade in the opposite direction, sell expensive and buy back cheap. But basically, all traders around the world are seeking for the same thing, making profit with their investment. So where Forex trading differs slightly is that you are speculating on the value of one currency relative to the value of another. So trading, if you, for example, if you trade a share, then you were speculating that the value of the company, the share you trade with, is rising up, is going to be more worth. Because if you're speculating that the price is going up and it's falling down, then you lose money. Or if you trade a commodity like gold or like wheat or whatever there is, so coffee, something like that, yeah, then you suppose that the price is rising and you're speculating on a rising price. In Forex, there is completely different because there you are trading of the value of a currency, not on a commodity of a share. So, and currencies are always grouped together. They are always two. For example, euro, US dollar. So, and then the value is traded against each other. And that's why we talk about a currency pair. So the word Forex means that's the Forex market. Yeah. We also can say it's the currency, but basically you should know that we talk about the Forex market. So, and there are single currencies, and in trading, we do trading currency pairs like euro to the US dollar. So, and this relative value is expressed as how many units the first currency is worth in relation to the second one. So, one unit, basically, we talk about the standard unit, we talk about the standard lot size, means, hello, Forex Striker, thanks for being here. Is one unit or 100,000 units is one lot, L-O-T. That's the standard lot. And that means, okay, one standard lot has 100,000 units. Yeah. So if you trade, for example, here with SabioTrade, you trade mini lots, then we trade 10,000 units. It's a mini lot. And there is another smaller one. It's the micro lot. There we trade 1,000 units. But the standard lots, the banks are trading together and with each other is always one lot, means 100,000 units. So for example, let's have a look at the US dollar, Japanese yen. If the dollar is being valued against the Japanese yen, and let's say we are at 113, or the exchange rate is 113.00 or 00, it would mean that $1 US dollar JPY, $1 has a worth of 113 yen. And there is another thing you should keep in mind, that after the comma, yeah, we have in Japanese yen 2 digits, and in all other currencies we have 5 digits. So, and the fourth digit after the comma is the pip, and pip means, just for your information, the one, no, that's the wrong color. So 1 pip, yeah, it's the pip, means price interest point. Yeah. So in yen, we have 2 digits. In euro dollar and all the other currency pairs, we have 5 digits. And the fourth digit after the comma is the pip. And number 5 is the tick. But we trade in pip, price interest point. Yeah. Mr. Singh, hello, sir. Nice to have you here. Thank you very, very much for your precious lifetime. Okay. So in basically, trading currencies is kind of simple. Arguably, the best way to start trading currencies and gain initial understanding of them is to try here on an assessment on SabioTrade. Yeah. So let's see. Yeah, if you go on the homepage on SabioTrade, then you start an assessment. It's like a demo account, and there you don't have any kind of risk. Yeah. So, and there you can start with currency trading. And this is the way to avoid your own risk. Yeah. If you want to trade in a risk-free trading environment in this kind of virtual way, yeah, then start with the assessment accounts here from SabioTrade. And up to today, we have a really, really good news because we got let me see. I got today WhatsApp. Where is SabioTrade? Yeah. So now we have a code today of Boost. Let me tell you this. It's Boost, and there you get 50% discount of every challenge in the next 72 hours. Yeah. So Boost and 50% discount. So you really start today with the assessment. But I have a special link for you. Just wait a second. I give it to you in the chat. Mr. Singh, no, you are not. You are not late. Yeah, I'm here with you. So give me just a sec. Here we go. Here we go. Wait. Here we go. There is it. So, for example, I give you the link in the chat right now. So there is a special link. If you use this link and then you give the Boost discount, you get 50% discount on every assessment in the next 72 hours. So you should really start today. And very soon we will have a live trading room here on SabioTrade, and then we can trade together because I'm a trend follower. I'm the logical trend follower, and we will have a lot of fun together, and we will make a bunch of money together in our currency pairs and of course in others too. Okay, so before, and that's the good thing, before you do live trading, yeah, that's the good news here with SabioTrade. You can open this assessment account and the next 72 hours in 50% discount. So use the link I give you here in the chat, yeah, and then you can start today, and you are in a risk-free environment, and you can start with your own trading. So before we start with trading, we really should know what we do there. So how we can read the currency pairs. Let's take an example. And I opened where is my SabioTrade? Here we go. So for example, you see here, we have on Sabio many currency pairs. So if you click here on this plus and this plus symbol here, and then you see the Forex. And here Forex means that's the Forex market. And there are the currencies, Euro dollar, US dollar JPY, Aussie dollar, and on and on and on. So many Forex and currency pairs down to Euro and Norwegian krone, or Euro, South African rand, or Swiss franc to Norwegian krone. So you can trade many currencies beside, of course, stocks, commodities, and indices, for example, like this. So if you will look at the live Forex price on a trading platform like SabioTrade, then you see we have many trades, many Forex pairs, so currency pairs. Yeah. So, and they has even 3 letters called ISO, means International Organization for Standardization. Yeah. ISO. That's a symbol like GBP is for British pound. We always have 3 letters. ISO, International Organization for Standardization, and that means 3 letters. Yeah. For example, USD is the shortcut for US dollar. JPY is the shortcut for Japanese yen. And CHF is the shortcut for the Swiss franc. Cricket Minion, are we going to do live trading? Not today, but if you follow me here on YouTube, on SabioTrade, very soon we have a new project, and then we do live trading together. Or maybe if you follow the Telegram channel, SabioTrade, then very soon we start with live trading. Today, it's just education that you know what we do. And in one of the next webinars, especially in, I guess, August or September, yeah, then we make live trading sessions. But the problem is, at this time, at 6 p.m. German time, it's a really worst time to make trading, because you know why? The Forex market is driven by Frankfurt and London, and those guys are done today. So the Forex market is driven mostly between 7 and 6 in the evening. Yeah, and so it's not a good time to make live trading. So very soon we do live trading a whole day together. Actually, I'm working on a big project with SabioTrade that we have a one whole day to make live trading. Actually, this is what I'm doing with my Dowhow family. We have live trading from Monday to Friday. I can show you. And then we continue here. So we trade in 1 minute chart. We trade in 5-minute chart, and in 10-minute charts, and in 1 hourly chart. So, and you see, and we do this from 7 a.m. until 7 p.m. From Monday to Friday, but in a separate room. And this is what we are planning with SabioTrade very soon, that we can do this together. Or you come to my community, and then we can do it every day. So this is just what we are actually planning with SabioTrade, and I'm glad that we can do this. The London session, London session starts 7 a.m. And mostly the big guys, they are that driven the market, that drive the market. They are going home at 5. So, and look at the USA, because the Americans, the US guys are more stock traders or future traders. But the US market is not really a Forex market. It's more stocks and commodities and future trades. So I do trading for living for 25 years. So I have a lot of experience about that. So the best time if you trade currencies is between 7 a.m. in the morning and around about 5 or 6 p.m. That's why we make in our sessions here actually this education, that you know when you come into real trading, that you know what you're doing. That's the best part. But very soon, and I hope we can start very soon, we have live trading together. So keep going with SabioTrade. Open an account here with the link I gave you here right now. And follow here on YouTube the channel from SabioTrade, and on the Telegram channel also. And yeah, then you will be always informed. And if you would love to, I have to show you something, because that you believe me that we don't talk about any kind of bullshit. So because I want to show you something. Where we go? Here we go. Here we go. In a new window. So nothing tells you more than the numbers, right? So for example, you see we trade in 1 minute chart, for example, we trade Aussie Canadian, Euro dollar. We trade the DAX, British pound dollar, gold, Dow Jones, and S&P 500. So and as you can see in 1 minute chart, this is 1 minute chart, that's 5 minute chart, and 1 minute chart we do from 7 a.m. in the morning until 6 p.m. in the evening, German time, by the way. Yeah. So and as you can see, we have an awesome hit quote. Yeah, 70%, 65%, 66, 56, 61, 61. So you see how profitable this is. And with this trend following approach, with this How approach, I teach my students, and very soon you will get the whole course for free here on SabioTrade. The moment you open this account, an assessment account, with the link I gave you here in the chat box, and very soon you get the whole course, and then we can trade together. And you see, it's really awesome. So in 5 minutes, for example, 66%, 60, 11, that's 50, 61. Less signals in gold actually. In Dow Jones, almost 70% hit quote. You know what that means? Even in 5 minute charts, you get 10 signals and 7 signals are going into the profit. Yeah, this is trend following, and this is what we're doing very, very soon together. So in 10 minutes, actually, there we don't have so many signals. So the best actually is Aussie New Zealand dollar, DAX, Dow Jones 64%. So you see, it's really, really cool. So if you want to be a day trader, and if you want to complete the challenges, follow Dow Trading very, very soon. I'm really glad that we can do this together. Okay, and the best thing is with the currency market. Okay, so how to read currency pairs. Let's say, and let's talk about euro versus the US dollar. And you see, this is the currency, always ISO, 3 letters. EUR, it's euro. USD is the US dollar. So to the right of the symbols for the currency pairs, there are rates at which you are able to trade. So the bid is the rate that you're able to sell a currency pair at, and the ask, bid and ask, supply, demand, there is the rate at which you're able to buy. So that's the bid and offer, or we say buy and sell prices. Yeah. So the difference between the two pairs or the two prices is well known as the market spread. So supposing that you think the euro will weaken and the US dollar will strengthen, you will likely want to sell the euro and buy the US dollar. So we have a look at our platform on SabioTrade, and this is euro US dollar. So you see, and there is the spread. So you see the price actually is 1.0987. Yeah. So here on the information, there you see 10987. So the 7 is the 4th digit after the comma or the point, and that's the pip. The number 5 is the tick. So 10 ticks is 1 pip. Pip is the shortcut for price interest point. Yeah. So, and you see, we have 109,872 and the buy is 109,878. So there is a really less spread. Yeah, a really less spread. So trading conditions, for example, we have a floating spread. It's not a fixed spread. Round about 0.4 pip. That's 4 ticks. Yeah. So, and you see, this is what we talk about euro US dollar. And for the moment, that means 1 euro, 1 euro costs $109.87. $1 and round about 9 cents, we can say. This is how this is working. Yeah. So, and if you think the euro gets weakened and the dollar is strengthened, then of course you need to sell the euro and to buy the dollar. A currency pair expresses how much one currency is worth in relation to another currency. So the price quoted for the currency pair is the number of dollars per euro. If you are right and the euro weakens, $1 will be worth fewer US dollars. Or we can say, in other words, the exchange rate euro dollar is going or will have go down. Yeah. So you would be selling euro dollar in the hopes that the rate goes down, and the rate you deal at would be bid price of 110.36. Let's see it again. So you see, before we had some numbers at 2:30 this afternoon. There were some inflation numbers again. And you see, the trend, look at this one, the trend was going down. Can you see that? We're starting here, move, correction, move, correction. So, and if you were trading in the short direction following the trend, then you will stop sell order here and you would say, okay, the trend will continue to the lower side, and then you were trading and starting to sell the euro, and then you made a bunch of money today. Is it important to know something about the numbers which were announced at 2:30? No, it's not. You were just following the trend. That's all. That's really cool. So, and this is how currency pairs are really working. So, and finally, to reiterate, you sell if you think an exchange rate will go lower, and you buy it if you expect it to rise. It's simple. It's really that simple. The Forex market, ladies and gentlemen, is the biggest market, the largest market, and it's the most liquid market in the world. We trade, and that's a big number, we tend to trade every single day, Monday to Friday, $6 trillion. In German, we say $6 billion. In American, US, in English language, it's trillion. Every single day. We trade every single trading day almost $6 trillion. Can you imagine this? And this is why the Forex market is that really good for us to start, because we can trade with. We just can play the game with. Okay, so the vast majority of the market are just a couple of currencies. Regarding liquidity, it's worth that we keep in mind that the larger the trade value between two countries, the more liquid the currency pairs of these countries will be. So, for example, the most liquid pair on this planet Earth is, not really surprisingly, euro US dollar. It's the most liquid currency pair in the forex market. And of course, it's the most popular currency pair ever. Do you have to trade it? Of course, because it's the most liquid pair ever on this one. And in euro US dollar, we have every week around about 20, 25 signals in 1 minute chart. And actually, we have a hit quote around about 61%. How cool is that? Yeah, you just need to know what you have to do. So basically, when it comes to the major pairs, that's not on the formal list. There is not really a formal list which defines the currency or the major currency pairs, or what is the best currency pairs. But if you talk about the major pairs, that we are usually referring to the 6 most actively traded forex pairs, and that's Australian US dollar, Euro US dollar, British pound US dollar, US dollar Canadian dollar, US dollar Swiss franc, and US dollar JPY. And this is a really interesting thing, because there you have an interesting correlation, because in the first 3 currencies, the US dollar is the foreigner part. We call it, the first called one is the home base, and the second one is the foreign base. So which means in Australian US dollar, the Australian dollar is home base and US dollar is foreign base. Yeah, that's what we call in technical terms. So the first 3, Australian dollar, Euro dollar, and British pound dollar, you have the US dollar on the foreign base. In the last 3 we have dollar on the home base, dollar CAD, dollar Swiss, dollar JPY. That's the most liquid pairs ever, and that's the so-called major currency pairs. There are exactly 6 of them. Of course, unsurprisingly, it is the currencies from the world's largest economies that comprise these forex major pairs. The vast amounts of trading goods and service conducted with the nations involved is one of the reasons behind the currencies being traded that extensively. Another reason is the political and economic stability, and based on the history associated with these currencies. It boosts their appeal, especially in times of economy uncertainty. Even I know we have really crazy times actually in this world, but to be honest, the economy are kind of stable in Canada, in London, in USA, in Germany, in Europe. We have a kind of stable economy. Everything is going crazy at the moment. We know that, but to be honest, if you compare it with Russia, or if you compare it with anything in Asia, for example, or in Africa, then the economic in the major pairs are really that stable. Yeah. So, and the US dollar, to be honest, yeah, is the particular popular. Yeah, because it's supported by its status of the reserve currency of choice for all central banks around the world and many key commodities. For example, every commodity is calculated in US dollar. All future markets, all future commodities, coffee, wheat, beans, whatever there is calculated and valued in US dollar. And this necessitates the currencies usage for such transactions. After the US dollar, it's the euro. which is the most commonly held currency by governments and institutions. What's the pros and the cons of the major currency pairs? We have a variety pros and cons with these currency pairs, but the solid advantage of major currency pairs stem from their popularity. Everybody, I would say every trader knows about US dollar, Australian dollar, Canadian dollar, euro, for example. So you will find that news regarding these forex pairs is really more readily available. So you can have a lot of news. For example, if you go on your Sabio platform and you go on a euro US dollar, for example, then you have the economy events. Yeah, you have the economy events. You have the technical analysis. You have some news for this currency pair, for example. Yeah, and so today we had U.S. Fed office show more openness to September rate cut. So that means that weakens the euro today and strengthens the US dollar, for example. So you hear dollar rises on reassuring data and the euro slips, for example. So you see a lot of interesting news we have here about all currency pairs. So meanwhile, there are regular economy updates for their underlying. So we have almost every day at 2:30 or 4 p.m. we have some interesting numbers. They get announced and they have a lot of influence to the markets. So, for example, I forbid my students to have open trades in 1 minute chart when there are numbers coming out at 2:30. I always tell them same story, close the trades, wait until the numbers are out, and then you can come back. That's very, very important. Okay. It's very interesting that if you have a look at the of all currency pairs, there is one potential con of trading is the inability to receive the type of regular, reliable, and fixed returns you can usually expect to receive with other types, for example, as stocks or maybe bonds. Yeah. Why is it? It's very interesting. I will show you something very, very interesting. So, for example, if you have a look, let me see. Here we go. So let's have a look at euro dollar, for example. And let's see here in, where is it? Let me show you here. So we go up here to 1 month, for example. So we have not that really much history right now. So let me try something else on my own platform, for example. So I show you one thing. And I go here to 1 month, for example. Then you will see the following thing. Look, this is euro dollar. Look, this is 1978. And today it's 2024. What do you realize? What do you realize? Instead of, for example, the S&P 500, or for example, gold price. It's very interesting that if you know that all shares, all indices, all are going always in one direction, up. Of course, in a trend. Up and up and up and up. If you have a stable stock, if you have a really liquid index, it's always going in one direction, but not Forex, not currencies. Look, currencies are always driven by the tax rates, by the rates. So, we're talking about the doves and the other ones. We say, okay, the rate, they cut the rate or they rise the rate, something like that. And that's the reason why currency pairs or pairs not going in one direction all the time. They are limited on the upper side. Yeah, for example, you see that one. They are limited roundabout on the upper side, and they are limited on the lower side, which means all currencies are traded in one corridor, in one range. Of course, we have breakouts about external factors, but basically, you can say there is any kind of fair price, but no currency is going up and up and up and up and up and up, or down and down and down and down and down. Why is it? They are depending of rates. And that's the reason why currency pairs, you can compare it like this one. Take another one, British pound. That's not that much history I have actually. Let's just go. Let's see another one if they have more history. Yeah, a little bit more history. You can see here it's going back to 2006. You see, it's not only one direction. There is just up on the upper side and here on the lower side. There we have the range. The currency pairs are ranging between the upper and the lower side. And in the meantime, there is a so-called fair price in the middle. It's a fair price because it depends from the rates. Interestingly, right? Yeah, that's a difference to the currency pairs. So, and that's why you can trade also the trends, but you should not expect any whatever there is. You should not expect that currencies are going always in one direction or falling until the bottom or something like that, because they are depending of any rates. Yeah. So, and you can interpret them, or you can be a trend follower like me. This is what, for example, what we do here on SabioTrade. And you can see this is my account. It's a 50K account. And I can show you my positions. Yeah, so you see I trade here, for example, DAX, and that was Aussie Canadian dollar. There was one loser, and you see 4 profits in a row. This is what you can expect. Oh, that's I can see my camera is a little bit in the way. Let me see if I can. Here now, yeah, I can see it better. So you see, that's what I'm talking about. If you are a trend follower and you're working with the trend, you see, then you have the hit quote of around about 7 profits and 3 losses. Yeah, this is when we talk about real trading. So that's why you should open an account and trade as a trend follower. Yeah. Okay. Major Forex Bear is a good place to start. Of course, it's a good way to start because now you know something about Forex. If you have insights or familiarity into a particular common economy like Europe or something like that, you may naturally feel inclined to trade its currency, even if that means trading a pair that is not one of the majors. Overall, the benefits discussed above include: we have here on SabioTrade really tight dealing spreads together with the great availability of economy news and forex analytics, which mean that the major currency pairs are a good way for many people to begin exploring the forex market and to start with trading. Let's make a short conclusion. If you want to learn more about forex online trading, then learn about forex currency pairs first. And you have to deal with the bid. If you are selling the first named currency, the home base, and the ask if you're buying the first named currency, it's a foreign base. And a good way to start is really with currency pairs. And the best thing is, as I said, start with SabioTrade. The link you see in the chat box. And yeah, that was my part for today. I want to say thank you for listening today. Thanks for being with me. We will see each other in 2 weeks again with the next special topic. And I'm looking forward to seeing you there again. As always, ladies and gentlemen, stay with us here on SabioTrade, on Telegram channel, on the newsletters, and on here on the YouTube channel, and be informed all the time. And as always, have courage and be kind. And may the force of the logic be with you. See you next time.